On today's episode, we are going to take a look at two beverage companies, and I want to see which one is a better investment for me. The first one we're going to take a look at is National Beverage Corporation, ticker FIZZ, FIZZ. And this is one that's probably known to a lot of people. But the second one I want to say is probably one that many have not heard of. And this is Celsius. Celsius, ticker CELH. This is one that is growing at crazy levels. And on today's episode, like I mentioned, I want to find out which one to me is a better buy. And to find that out, I actually have this point system set up that will help me see which one is the true winner. So we are going to take a look at things like market cap growth, revenue breakdown, future growth, revenue growth, cash flow margins, balance sheet, their valuations, and finally, my thoughts. So let's get started. And if you are new to my channel, if you are a long-term investor, and if you like learning about growth stocks, make sure to hit that subscribe button. And to all my returning viewers, thank you for all the support. I truly appreciate. Finally, if you guys ever want to get in contact with me, the YouTube comments is probably the best place. I'm very active, but I also do have a Twitter and I have a Discord channel, which is free to anybody that wants to join. But remember, all of this are just my opinions. None of this should be advice, as I am not a professional. Also, make sure to check out my website, josenaharo.com, to subscribe to the weekly newsletter. And let me know in the comments below, who do you guys think is going to win today? Do you think it's going to be Celsius, or do you think it's going to be FIZZ? Celsius is one of those crazy growers, and FIZZ is one of those companies that has already been stabled and is already making a nice amount of money to investors. All right, so the first point we're going to take a look at is market cap growth. And here we're going to take a look at the past 5 years and see which one has returned the most return to investors. And the reason I take a look at 5 years is because, one, I am a long-term investor. So I do believe by showing this 5-year gap, it can actually help and show the type of growth that can go into a portfolio by just holding for 5 years. After that, we're going to take a look at the revenue breakdown. So Celsius in the past 5 years has returned about 500% to investors. And then let's take a look at FIZZ. FIZZ in that same time frame has actually had a little more choppier ride, has returned about 178% to investors. And the great thing is both of these have actually outperformed the S&P 500. The S&P 500 in about 5 years has returned 54%. So FIZZ has returned about 3 times as much returns compared to the S&P 500, and Celsius almost 10 times that return. So obviously the first point here we're going to have to take a look at, we'll have to give it to Celsius for that huge returns. Next, I want to take a look at revenue breakdown. And normally when I take a look at revenue breakdown, I want to see how the business collects their revenue and what types of different products. Both of these are beverage companies, so they collect revenue in the same manner. The best way to take a look at it is to look at the products they own and try to see if they're hitting different markets. After that, we're going to take a look at their future growth. First, let's take a look at National Beverage. And the best place to really look at their products is to just go to their websites. Here I'm on their websites. I go to our brands and they break down the products they hit in the following 4 segments. They have soft drinks, they have juices, they have waters, and they have energy. Okay, so they have 4 different products. Now, if we take a look at Celsius, Celsius has about 5 products. And the first thing I do notice is look at the difference between the websites of National Beverage and the website of Celsius. Celsius does seem to have a better branding team, and their website really does look like it's on point. Unfortunately, that's not a point. I don't give a point based on who has the better website, but I do think it does show a little bit when your website is the first thing you look at when you start looking at a company or their product. So if you have a nicer product, it could be more eye appealing to consumers. So if we take a look at Celsius, their main product is an energy drink. And this is more of a healthy energy drink where they mentioned how they have 0 sugar, and they do have other types of products that they mention, and they have a huge variety of flavors. Next, they have Celsius Heat, which is more of a performance energy to help with before you work out. Then they pretty much have more of a post-workout, a Celsius BCAA drink, which is more of a recovery drink after working out. Then they have Celsius Stevia, which is smartly sweetened. Again, Celsius is looking to hit that energy drink with healthy energy, which is a market that not many sectors are really hitting at the moment. And here, like I mentioned, Celsius on Stevia is their smartly sweetened. And then they also have Celsius on the go, where you buy the powders and then you can create your own drink at whenever you want. Both these businesses are broken down into different segments. So for that, I don't think it would be fair to give a point to one over the other. So here I'm actually going to give a point to both Celsius and FIZZ. So Celsius right now is on the lead with 2 points, where FIZZ has 1. Now let's take a look at future growth. So when I take a look at future growth, I want to take a look at their annual revenue growth, and I also want to take a look at their annual earnings growth. So first, Celsius, let's look at their annual revenue growth. For the next 3 to 5 years, Celsius is expected to grow its revenue at 25.2% per year for the next 2 to 5 years, where the industry is only expected to grow 6.1% and the market is expected to grow 9.2%. So then let's take a look at earnings. Celsius is expected to grow its earnings 99% each year for the next 3 to 5 years, compared to the industry growing 16% and the market growing 22%. So we can see Celsius is beating both the market and the industry in both earnings growth and revenues growth. Next, let's take a look at FIZZ. And FIZZ does not have that same story. If we take a look at revenue growth, FIZZ is expected to only grow 2.8% per year for the next 3 to 5 years, where the industry is expected to grow 6.1% and the market is expected to grow 9.2%. Now, if we take a look at earnings growth, earnings is actually expected to decline 1.8% per year for the next 3 to 5 years on average, compared to the industry growing 16.6% and the market growing 22.6%. So here we can obviously see who the next point is going to go to. Celsius is growing faster than the market and industry in both revenue and earnings, compared to Celsius, which is nowhere near beating the industry or market in annuals or in earnings or revenue growth. So the next point is going to go to Celsius. So Celsius at the moment has 3 points and FIZZ has 1. Now we're going to take a look at revenue growth. So here in revenue growth, I want to take a look at historical growth, right? I want to see, yes, we can see estimations of their future growth, but what's really set in stone is their past revenue growth. So let's start off with Celsius. Celsius in 2019 grew about 42% year over year. In 2018, it grew 45% year over year. And in 2017, it grew 59% year over year. Now, if we take a look at FIZZ, let's see if the same story is being told. And it does not seem so. In 2020, FIZZ actually saw a revenue decrease of 1%. In 2019, it saw a revenue increase of almost 4%. And on 2018, it saw a revenue growth of 18%. So nowhere near that level of revenue growth that Celsius is growing. Remember, Celsius, the lowest in the past 3 years was 42%, and the highest was 59%. Where FIZZ, the lowest was actually a decline of 1.35, and the highest was only 18%. So here, next to for revenue growth, I'm gonna have to give it to Celsius again. FIZZ is not looking that good, but at the end of the day, we still have to take a look at the balance sheet, valuation, and their margin growth. And these are places where a company that is already settled down, it's already in a stable place, can grab some points there. So now let's take a look at margins. So let's start off with Celsius. And this, if you guys don't know, I'm using this great website, lazyfa.com. Make sure to check it out. So Celsius in 2019 had its first profitable year of 13.3%. In 2018, it was negative 21.7%. And 2017, it was negative 23.8%. So the first thing we can see is, on average, this Celsius tends to have negative earnings. But this is normally what you see with a growth company. You expect them to have negative earnings for most of the time, but eventually their earnings start to go positive. 13.3% is pretty good for the most recent years. And let's take a look at their most recent gross margins of 41.7. All right, so now let's take a look at FIZZ. FIZZ gross margins is 37.0. So it does seem like Celsius and FIZZ have similar gross margins, and that's to be expected, right? They are both in the same industry. So normally if you are in the same industry, you should be expected to have the same gross margins. The one thing that FIZZ has over Celsius at the moment right now is profit margins. This is a business that has been profitable for the past 10, 20 years to be exact. And here in 2020, it was 13%. In 2019 was 13.9, and in 2018 was 15.3. One thing I don't like that I'm seeing is their profit margins are decreasing. But obviously, FIZZ has had better earnings record than Celsius. So this point is going to have to go to FIZZ. So FIZZ is now 2 compared to Celsius having 4. Next, let's take a look at cash flow margins. So here in cash flow margins, let's start off with Celsius. Celsius, very similar to their profit margins, have not provided positive operating cash flow margins until its most recent years. In 2019, it had operating cash flow margins of 1.3%. And that to me is not a great number. It's something that's definitely throwing a red flag for Celsius. But we got to also remember, this is a growing company. It is a lot smaller than FIZZ. It's about 3 times smaller than FIZZ. So we still have to have a waiting period for Celsius to continue to grow to really show us what it has. Now let's take a look at FIZZ. FIZZ has had profitable operating cash flow margins. Its most recent year was 17.76%, 17.7%. And it does seem like it's around those levels most of the time. In 2019 was 13.7, and in 2018 it was 15.86. So it does seem to be in the mid-teens of operating cash flow margins. So we can see FIZZ also has better cash flow margins. And if you guys don't know, operating cash flow is cash flow that comes from its everyday activities. And you want its everyday activities to be providing some form of positive returns. So for seeing Celsius not having that most of the years, it's like I mentioned, a bit of a red flag. But again, they are in different stages right now. But for here, I am going to have to give another point to FIZZ. So FIZZ has 3 points right now and Celsius has 4. Now let's take a look at their balance sheet. So we're going to take a look at their most recent quarter. And here I want to take a look at their quick cash compared to their debt. So let's start off with Celsius. Celsius right now has about $20 billion in quick cash. And it has about, now if we take a look at liabilities, they have about $10 million in current debt and pretty much nothing in non-current debt. So they have pretty much a 2-to-1 ratio of quick cash to debt. So that to me is a very, very strong balance sheet. It's not the best balance sheet. And numerically, right, we're only talking about millions here. And we've seen different companies with a lot higher numerical balance sheet. But when we take a look at ratio, a 2-to-1 ratio of cash to total debt is a very, very strong balance sheet. Now let's take a look at FIZZ. So FIZZ is, we can see, at a whole different level. They have about $300 million in quick cash, and they only have about, they have 32 million in non-current debt and 17 million in current debt. So about $50 million in total debt. So this ratio would be a 6-to-1 ratio. So I do say, like I said, both of them have a very strong balance sheet. Nothing to really throw a red flag for me. But FIZZ with that 6-to-1 ratio is a lot better than Celsius 2-to-1 ratio. So here we're gonna have to give a point to Celsius, to FIZZ, I mean. So now it is a tie game, and I'm not gonna lie, I do believe that I like Celsius a bit more. But here I'm just taking a look at numbers. So at the moment, my thoughts aren't really affecting the point system. It's just the overall numbers that we're seeing. I did expect that Celsius would be a lot stronger than FIZZ, but it does not seem like that's the case. So we only have 2 points left over, and that's valuation and my thoughts. And if you guys have been watching my show for some time, I just started doing a valuation method where I pretty much take a look at many different metrics. So here, this metric that I'm using is taking a look at trailing 12 months revenue growth. Celsius is growing in the past 12 months, has grown 61% compared to FIZZ seeing a negative 1.3% growth. I'm also taking a look at profit margins. I'm taking a look at current enterprise value compared to their sales. And this gives me a form of valuation to compare the two. So based on current valuation, it's telling me that Celsius is a lot cheaper than FIZZ. When we take a look at Celsius, in theory, if I was paying $1 for Celsius, if I was paying for FIZZ, I would actually be paying $1.32 for FIZZ. So based on current valuation on this system that I've used, and I have done plenty of videos where I really go in depth on this, make sure to check them out. FIZZ at the moment is worth 32% more than Celsius. But I'm not really too concerned about their current valuation. I'm more concerned about future valuation. And when I take a look at future valuation, I'm taking a look at their future expected revenue for 2020, 2021. I'm taking a look at their future expected earnings and giving me a profit margins and expected revenue growth. Now, if we take a look at their future values, the system, it's actually the reverse. Celsius is a bit more expensive than FIZZ. If I was paying $1 for Celsius, I'm paying about 99 cents for FIZZ. So taking a look at future valuation, it does not show that they're that far overpriced from each other, right? This doesn't tell me if they're overpriced to the overall market. It's pretty much just telling me their valuation amongst each other. And right now it's telling me that both of them are pretty much equally weighted. Obviously, FIZZ is about a penny short, a penny cheaper than Celsius. So for here, I'm actually gonna have to give it to FIZZ. And this to me was a crazy one. I did think that Celsius would beat FIZZ in both current valuation and future valuation. And you might be like, Jose, but why current valuation tells me that Celsius is a lot cheaper? But as a growth investor, I don't really care about their current valuation. I'm more worried about their future valuation because I'm investing in the future of the business. I'm not investing in what the business has at the moment. And even though Celsius is expected to grow at crazy levels and is expected to at least become profitable continue to become profitable, FIZZ still beats it. So remember, in future valuation, if I was paying $1 for Celsius, I'm paying 99 cents for FIZZ at the moment. And again, that completely tripped me up. And to all the Discord members, if there's a huge group of following in the Discord group that are into Celsius, and this is probably gonna create a huge storm there. All right, so right now FIZZ has 5 points and Celsius has 4 points. And the final point is my thoughts and what I think about the business. And right now, I want to say I do like Celsius more. And let me explain why I like Celsius more. First, this expected revenue growth is crazy for Celsius. Celsius is expected to grow at some crazy levels in both earnings and revenue compared to FIZZ. FIZZ is actually growing slower than the market and is seeing a decline in earnings. That's not something I want to invest in. I never want to invest in a business that's doing worse than the market. At that point, I might as well just invest in the overall market. The other thing is I see Celsius hitting a market where I am a little bit more bullish on. But again, this is just probably because of the type of consumer I am. I do believe that healthy drinks is the future, especially with people around my age where they are more health oriented, or not just my age, just the overall market at the moment. We still have plenty of soda drinkers, plenty of juice drinkers. But I do think the energy sector is one, especially a healthy energy sector, is one that can be a huge potential grower. And it's a market I am more bullish on compared to the market FIZZ is in. And I also do believe that Celsius is one that can be a potential acquisition by one of the big guys. and they do have an overall better branding. For those reasons, I am gonna have to give my final thoughts, my thoughts to Celsius. And this actually gives me a tricky situation where they both have 5 points at the moment. All right, so now on the final points, we can see that there are a tie based on the numbers. The only reason FIZZ did not win was because of my thoughts. So if you want to take off my thoughts, FIZZ seems like the better investment for me. But again, at the end of the day, I do consider my thoughts as a very important system, and that's why I put it in the points, because I feel like I am better. Because I feel like I can really see where the market is going, and I have to believe in that market growth. I have to believe in that market sector, and that's why I had to put my thoughts in the point system. But again, right, it does seem like both of them are, if I was to go into the beverage companies, both of them seem like a great place to start. At the moment, I am just going to continue to add position to Celsius, and I do not seem to have any ability or any brave to go and enter FIZZ. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up, and have a good night.